Welcome back, everybody. This is Jeremy, the host of the Tampa Bay Veteran Investor Show. And today I'm super excited. I have Ryan with CoStar here. And you've probably heard of CoStar, but if you haven't, we'll go through some of the details. But today we're going to be mostly focusing on the multifamily market within Tampa Bay. And CoStar has like millions or probably billions points of data to look at. And so really excited to look at what's some of the rental trends that we're seeing, some of the rental prices, concessions. So whether you own multifamily or even just single family properties, you'll have an idea of kind of what's going on in the market and what we're looking at, especially middle of the year here. So Ryan, appreciate you coming on today. Would love to hear for you to give a perspective of your time here at CoStar and tell us a little bit about it. You know, some of the companies it's affiliated with to give the listeners a little bit of idea of the depth of CoStar, and we'll jump into some data. I think it's going to be good.
Sounds great. Well, Jeremy, thank you for having me. It's a pleasure to be here, and look forward to kind of sharing some of what CoStar is capable of and what the multifamily Tampa Bay market looks like. For some context, I've been with CoStar for about 3 years now. Spent 2 years in research. I had the 12th largest revenue generating portfolio in Manhattan, New York, doing research for our clients there, and then transitioned to the account rep side where I now help clients face to face with their CoStar accounts and then help new people evaluate the platform too. So if you have any interest after seeing this presentation, feel free to reach out to me. That's all my contact information there on the screen, and happy to talk with you about how CoStar could be useful for you and your all's business.
Awesome. Appreciate that.
Of
So
course.
we have a couple talking points that we'll go through. Ryan has some stuff prepared too, so I'm gonna let him kind of. And if you guys aren't watching this, we'll still try to sort of talk you through what we're seeing here. But we might be able to even share some slides or something after. But Ryan, take us through just what we're looking at when it comes to Tampa Bay multifamily. Some of the stuff that you think would be interesting, and kick us off here.
Yeah, of course. So to set the stage, I want to talk a little bit about what CoStar is as an organization and where the data comes from. That way, you and your viewers can get a better understanding of CoStar as a whole, and then we'll move into some of the Tampa Bay market data. So, what is CoStar and where does the data come from? If you've ever seen the product, once you log in, it's a filter-based platform with billions of data points that you can narrow down your focus and get actionable intelligence on. And we are the largest integrated commercial real estate platform. We are a data research and technology company with over 8.5 million commercial properties researched, over almost 6 million sales comparables now. And we also profile different commercial tenants, so think retail, office, industrial, so that you can know which companies are in which commercial buildings, as well as tracking those actual leases as well from those buildings themselves. Now, we've been in business for almost 40 years. We've invested over $5 billion in that research and technology. And we do have over 250,000 subscribers now that use our service every day to make better decisions in the commercial real estate market. I work with several multifamily owners, property managers, and developers here in Tampa Bay and kind of help them to evaluate the market and use the platform as well. So excited to talk with you all here today, too.
Yeah, and I think most of the, unless I'm mistaken, I think most of your big brokerages that are going to be selling assets are specific to even multifamily. Like, I'm sure the guys or gals at Franklin Street or CBRE or Marcus Millichap. Like, pretty sure all of them use CoStar
Yes.
to one context or another. And there's some other brands here that you guys will recognize. So, if people are selling assets or you're looking to buy, you're going to be likely interacting with a lot of the data that CoStar's put together.
100%. A lot of our owners will use CoStar underwriting reports to send to lenders in order to prove, that this is a good opportunity. And then also sourcing those deals or land for new development. That's where CoStar can come into play to get you access to the information and the actual contact information of the individuals that own those pieces to the puzzle. These are all of the CoStar brands, apartments.com we've owned for almost 10 years now, I believe. And so we have a lot of really strong rental data directly from apartments.com, including the best concessions and most accurate concession data on the market when it comes to a database. We also have over 93 third party data feeds for rental information on the apartment side. So gathering data from a lot of different places and being able to aggregate things in order to see any particular piece of property and compare it to the market is our strong suit. We also are able to market spaces available for lease or for sale on LoopNet on the commercial side. And then some of these other brands also feed into CoStar as well, including STR for hospitality data specifically. Now, I like to mention some of the differences between CoStar and LoopNet because most of you might be familiar with the LoopNet platform, which is the largest commercial marketplace for properties available for lease or for sale. But CoStar, you'll actually see about 40 to 60% more listings there because not everybody pays to have their listings up on LoopNet. In addition to all of the off-market property data, contact information, and other market level data that you'll need to make smart decisions in the market, some of which we'll cover here today as well. So that's everything as far as an overview of CoStar goes. Happy to answer any questions before we dive into the multifamily review.
Yeah, I think it's important that like if people are searching for, let's say, multifamily properties, if you're working with like a residential real estate agent, right, they can use the MLS, which is going to have small multifamily. There is a tab for commercial where it's 5+ units. Sometimes you might be able to find some opportunities there that are not listed on LoopNet or different platforms. So you just want to make sure if you're looking to really buy a property that you have different sources of information and feed that you're looking through, because it's a more fragmented industry when it comes to commercial listings. Like there's no like if you're a residential agent, everybody uses MLS. There's one platform everybody goes to. Commercial, it's different. So maybe depending on the asset class or just what that brokerage may use, you may want to just be aware and kind of try to make sure that you're seeing all the inventory out there and not maybe just looking at one platform because you might be missing something, in a different area.
Yeah, 100%. A lot of our clients will call CoStar the commercial version of the MLS. Um, we are, the largest and kind of go-to standard for listing availabilities. To your point, commercial real estate can be fragmented at times, and that's why, as an organization, we put in a lot of time, money, and effort to create transparency in the commercial real estate market and get you the information that you need there. A great point. So I will go ahead and get started. So what is the Tampa MSA? So MSA is a metropolitan statistical area, and this is how different markets are tracked. And this is the Tampa Bay market. It includes Pinellas, Hillsborough, Pasco, and Hernando counties. There are over 1,250,000 parcels in the Tampa market, and of those, about only 94,000 are commercial. 71,000 are land, and a lot and lots of residential parcels, over 1 million there. So the commercial market is a smaller piece of the pie when it comes to different parcels and availabilities, but definitely larger deals to be had, and a lot more density to get you returns on your investments and managing properties if you're a property manager. So lots of opportunities out there. Now, when it comes to population growth trends over the last 5 years, Tampa basically doubled the national average of population growth, specifically seeing a lot of growth from 40 to age 40 and above. And so you can kind of see those stats coming into play here in the market for Tampa. The only thing that we are below the national average on is actually median household income. We have a lot of retirees. We have a lot of younger folks coming into the market. So Tampa specifically is a lot of old and a lot of young. And sometimes that middle section doesn't really grow as much. So you can see that in the numbers here.
I think that's pretty decent though. Like for 80,000 medium income, it's not bad.
Yeah, no,
It's not
it's
bad
great.
compared to the
It's
affordability that I feel is still is in the marketplace here. Whether you're renting or buy, even looking to buy, like average housing price being sort of low fours. I think if you just average across. So
100%. And this is the median. So, there are people below or above this number. Um, but I would agree with you. It definitely is a strong case here
yeah,
for
it's funny because
Tampa.
you have like we see the growth here, but then it's like my clients are like, well, I see that things are growing, but it's like, why are rents soft? It's like
We'll get
that
into
doesn't
that.
seem like it makes sense. So yeah, we'll paint the picture why.
Yes, we will. We will. So I'm setting the stage with some population trends. Then we'll go into some of the supply and demand. So population helps to tell us some demand, but supply and the construction pipeline is something that CoStar tracks regularly. And we'll see, that Tampa might be a little overbuilt at this time, which kind of gets to why that rental rate might be a little bit more stagnant than usual. Now, population as of now is also down in comparison to what it was post-COVID or even during COVID. We have the lowest population for the last 2 quarters that we've had in the last 10 years. So something to keep in mind. Now, those numbers may go up as we get more data, but less people are moving to Tampa specifically at this time over the last couple quarters than they have over the last couple years. So that adds to maybe a little bit more of why properties aren't, potentially getting leased up or a little higher vacancy as well. Now, another population growth trend that you can see is some of the year-over-year growth. So you can see that we're anticipated to kind of rebound there as well. Into some of the availability trends. This basically shows you the vacancy, studio asking rates, and inventory for the Tampa market in comparison to the national market as a whole. So vacancy rates is up now in Tampa, and that has to do with a lot of new inventory coming onto the market. Uh, COVID caused a lag in a lot of the construction deliveries for multifamily specifically, and a lot of builders are interested in the Tampa market for multifamily. So over the past 5 years, we've added over 43,000 units, and in the past year alone, over 8,000 units to Tampa. So that can increase some of the vacancy numbers that are coming into play and lower that asking rate value.
Yeah, I
As you
love
can see,
this.
some of those numbers are down.
I love this slide. So for those of you that are just listening in, might be driving, I'm going to walk through some of the numbers here. So on the vacancy rate piece of it, so national average vacancy rate is 8.2%. In our market here, it's up to 10.6%. And when we're looking at market asking rent versus the effective rent, which is sort of the difference between maybe active and leased, right? Or, if you're selling a property, it's the difference between sold and, maybe pending or active. But market asking rent per unit, national average, about 1798. We're around 1828. And there's maybe that's not quite 10%, but 3-4% or something difference between maybe what people are asking in the effective rent. Am I thinking about that right, Ryan?
Yeah, so asking rent is just based on current availabilities in the market. Effective rent takes the starting rent of a lease and subtracts out any concessions that are involved with that
I
lease.
see.
So you can see the
Okay.
concession rate for Tampa is about 6.3% now, whereas the national average is 3.7. So
So we're
we're
almost having to
a
give double the
little
incentive.
correct. Yeah. So two
Kind of.
months instead of 1 month.
And mostly in the multifamily space, what you might see is, very common, maybe a reduced deposit amount versus a first month rent that we might see more typical in single family. And then 1, 2, 3 months free, but instead of, maybe giving it all up front, a lot of times it might be divided out potentially over the lease, or at least that's how the effective rent's looked at, is if you applied some sort of discount across the board. So yeah, it's not surprising. And we have, just real quick on studios, 1 bed, 2 bed, 3 beds, kind of rents that we're seeing anywhere from 15 to low 2000s for that. And again, that could be a lot of the Class A stuff coming to market that's kind of pulling some of those numbers up. Where we, as we manage more of sort of BC stuff, asset class, the average rent we see for those are, you know, is a lot lower. So kind of depends. So we will be broad stroking some here on some of the data, but still, you can see right away, it's just a more challenging time, more supply, vacancies up. And when it comes to concessions, if you're a smaller operator where you have assets that are, let's say under the 50 unit kind of property where you likely don't have a lot of amenities, if any, that's what you're competing against, is the bigger guys with probably some sort of amenities on site that are throwing some big incentives to try to grab residents. And that's where you may have some residents leaving our properties, in essence, to go to something where they can be kind of upgrading for a similar price when you factor in those concessions. The concessions are, really, really making it attractive to try to pulling tenants up, maybe even in a nicer unit for not that much more when you factor in the concessions.
Yep. And all of this is leading to a lot of churn in the rental environment right now for longer term rental opportunities. In Tampa, it's a little bit of a different story as well because we're competing with the hospitality market. So hospitality is very strong. Everybody wants to come down to Florida and visit. So, you're competing with different Airbnb opportunities and things like that, which does keep the asking and effective rates equal to, if not a little bit greater than the national average, because people want to live here, they want to visit. So something to keep in mind, but definitely good trends to consider. Now, I wanted to take a little bit of a different direction and show some of the Tampa sales volume per year over the last 5, 7 years. And you can see that trends on the number of multifamily sales in Tampa are down compared to what they were pre-COVID. And during COVID, from 2021 to 2022, we had the highest sales volume during that year from July to July. Mostly, I would assume due to distress in the market and people selling off different assets there. Um,
Yeah, this is really, really telling because people will ask me, hey, are there any deals around for multifamily, this or that? I'm like, dude, I just, a big part of our growth as a management company was sort of the few years prior to COVID. I mean, we were almost doubling in size for a few years in a row. And a lot of that was where we were coming in as the introduction for for a potential management company for people buying assets. So they were buying multifamily. Hey, who's a good operator? Or you're asking the listing brokers who should we consider? And we were getting a lot of those new contracts, and that really helped with the growth, which kind of aligned with some of what we're seeing here. So you have a peak from, let's say, as high as 470 units of 4+ units in 21, 22. Then the following year, that's basically cut in half to low 200s. And between from 2023 to 2025, you dropped maybe another 10%, 20%. So it kind of bottomed out in 23, 24, 25, and it started to uptick a little bit, or you're seeing a little bit more activity this year. And I suspect that to kind of increase. I think obviously we had the storms a few years ago too.
mhm.
That did not help anything. I think that now we're starting to see a little bit of reprieve on some insurance costs and a few things, or just sellers coming to the realization like, hey, rates aren't changing that much. And if I really want out, I got to get out. And you have the people that bought sort of pre-COVID pricing too that are coming up on maybe 7-year balloons, 10-year balloons, where it's kind of like, all right, we got to, I might have to sell this or refinance. So it's a challenging time when you sort of have some of those balloon payments coming up, and we have clients that are, we feel the pressure because they're like, we got to get leases up, or you really haven't had the rent growth, or from a vacancy standpoint, like that's tough. You're trying to do everything you can to get units leased up for as much as you can with, kind of the market working against you. So it's a challenging time, but maybe we have some good news coming our way here in the next 12 to 18 months, hopefully.
I have faith in the Tampa market. I love Tampa. I think a lot of people want to live here. Um, just because population growth is downright down doesn't mean that it will be. Um, and I think Tampa has a lot of great things going for it. So I'm bullish on on Tampa as
Yeah.
a whole.
Yeah, that's it too. It's like, what's the long-term play for the investors, right? If anyone's trying to raise capital in the environment or put deals together, I'm sure it's challenging compared to alternative stuff that people can be investing in. Um, and yeah, it's put some people in a tough spot when you were underwriting rent growth, probably on most deals, and you've seen the opposite. So when you're raising capital and trying to execute in that type of environment, makes it really
Right.
challenging. But I think long term, in the same boat as you.
And when you have access to CoStar, shameless plug, you can kind of look at what's
Yeah,
forecasted for some of these metrics and be able to stay on top of what might be happening in order to build those into your underwriting plans, as far as
yeah,
what you're
yeah. That's
forecasted
one
to
thing
see in the
too. Is
market.
there? What I was really surprised with when I was walking through with Ryan before this to kind of prep for the show is the amount of data and cap rates and just all this stuff where you can get very granular on different areas, whether it's by zip code or just you can overlay a couple of different filters to kind of see where some of the hot spots might be coming up. But it just lets you know, have a clear perspective on what you're looking at in the market, what to expect. If you're really looking to buy properties, or if you're trying to 1031, what's realistically going to be the type of returns that you can expect on buying something in the market. So it's great.
100%. Couple more slides here, and then I will have to go for today. Um, but I like to touch on some rent growth trends and some of the vacancy in the market, just to kind of show you what that looks like in comparison to uh, some of the developments here. So you can really see in this chart that vacancy has ticked up quite a bit since 2021, but is projected to slow and kind of come down there. And although we're in a lull on the right-hand side of asking and effective rates in Tampa, it is projected to come back up towards a little bit stronger numbers that match the total U.S. there.
Yeah, that's great. On the market rent per unit and rent growth, yeah, it's pretty shocking to see. And the bottom of the graphs is that the year, right? That's the year that we're looking at, the 21,
Yeah,
22
that's correct.
sort of fall off. Okay, so yeah, so for market rent per unit really was high in 21, 21, 22, came down quite a bit, either sort of break even or even on a dip below what we had seen historically for average rents, but starting to see a little bit of an uptrend again, maybe coming in here soon or hopefully hitting the bottom. So we're kind of still not out of the shadows yet, but it looks like based on the forecast that it may still have a little bit of softness, which is kind of what I just feel internally for another, I don't know, 12 months or something, and maybe it gets a little bit better. But a lot of competition. Just hold on to your pants if you can a little bit longer and hopefully get some increases in the marketplace before too long.
If you notice the rental rate increase during COVID, it shot up like a rocket, and I think right now we're seeing some of the results of that increase as well. But that was everything that I had on CoStar for today for the multifamily market. Um, if any of you have any other questions in regards to multifamily, happy to meet with everybody. That's part of my job here at CoStar is to meet with people and share them the platform. So feel free to reach out anytime. You can reach me by email or phone. Phone number is 813 416 8280. Thanks so much for having me.
Yeah, no, I appreciate you, Ryan. And we'll have Ryan on again soon, do another deep dive. We might pull some specific properties or even do it a Tampa and St. Pete sort of property analysis and stuff. So just wanted to give you guys some perspective of what's coming. We'll try to make this a routine thing on maybe at least doing a few times a year to kind of keep you guys updated on the market and just some quick snapshots as we go. So I appreciate you coming on the show today, Ryan.
Yeah, thanks, Jeremy. Thanks for having me.
All right, man. Have a blessed day. So there's three ways that we'd love to stay in contact with everybody. My information is on the screen. We have the YouTube channel. If you scan the QR code, that's going to take you to our newsletter, which is mostly for private clients that we have. So you'll be able to get some perspective of just stuff that we share monthly from there. And of course, the podcast as well. But on the YouTube, we also share a lot of educational content